Hello everyone, welcome to Stock Trading's first lesson. This video will be short, but our upcoming lessons will be longer and more complex. So let us begin with Investing 101. We are going to outline some common mistakes we have seen traders make. These errors can easily be avoided with the right knowledge and game plan. The first rule of investing is not to put all your money into one stock. Putting all your money into one stock significantly increases your risk. It increases your risk because anything can happen to any company at any given time, which could cause the stock to drop. For example, a lot of companies have had scandals and internal management issues that have caused severe price drops. The way to go about investing properly is to invest in a handful of stocks, preferably stocks that are in different industries. Another big no in investing is something called blind investing. Blind investing is essentially gambling because this is when an investor purchases stock in a company without knowing the company's business fundamentals. To avoid this mistake, always do your own research before purchasing a stock, even if you have heard the sentiment on that stock is positive. The third rule is similar to blind investing, but it incorporates the factor of risk into the equation. The main point to understand here is that penny stocks are riskier than stocks like Google, Apple, and Amazon because investors tend to hold shares of large companies. A company like Apple has a lot of market share and cash to continue growing its business while already having an excellent track record. Whereas a penny stock company would most likely have risky growth projections. Finally, the most common mistake is to buy stock using all of your money at one time. Buying shares using all of your money at once can potentially trap your money into the investment. Some stocks fluctuate more than others. It is important for you to know if your stock is a high-risk investment so that you know exactly what to expect. The proper way of buying stock is to buy in increments because if the stock falls, you have more cash ready to produce more shares. This essentially averages down your initial buy price. So, let's say you buy 20 shares of a stock at $55 a share, and then you buy 20 more shares at $50 a share. Your average buying price basically drops from $55 to $52.50 because you rebought stock at the $50 price point, which was lower than the initial price of $55. It can be an exciting and stressful time when you first join the stock market. We advise all beginners to do what works best for them. There are a lot of techniques and methods to trade in the market, which we will be creating videos on in the near future. Don't make any assumptions on investing until you actually join the markets. Often, people talk negatively about the markets being a gamble and dangerous. This is false if your investing is done right. Do not be intimidated and do not give up. With every failure, you will get better. That wraps up our lesson for today. We hope this video was helpful. Hit the subscribe button below to see more educational content from us. If you have any questions or would like to provide feedback, please visit our main account, Stock Tradings, on Instagram. We appreciate your support, and happy trading!